Okay. Strategy is returning a non-taxed BTC yield to Class A shareholders in the form of BTC per share accretion, right, or BTC gain. That's really interesting compared to the idea of MSTY returning a cash dividend by selling the volatility to investors, which is taxed. So if you have a really long-term time horizon, you're bullish on Bitcoin, and you want to defer taxes for the next 10 years, Class A MSTR shares is the best long-term directional bet you can make on Bitcoin and MicroStrategy.
Welcome to Proof of Thought Podcast.
The first digital good anyone could actually own. It's a big deal.
Charles, here's your first principle.
As we looked at ways to improve, to create value, to maximize shareholder value, we stumbled on Bitcoin.
This is an awesome podcast. Best one I've done. So thanks again.
All right, Dan, we're here. Welcome to Proof of Thought Podcast. So glad to have you.
Hey Charles, what's going on? Yeah, great to be here. Thanks for inviting me on. I always love, talking with smart people like yourself and your co-founder here.
Oh, Dan, you're too kind. You're too kind. You're in the talking seat today, though. I'll be asking questions. So let's get into it, though, Dan. I would like to start from the beginning. I understand you started investing in Bitcoin, and I, had to wear my Bitcoin shirt today. It's actually my uniform. I wear it in every episode. But I understand you started investing in Bitcoin after the FTX crash in 2022. And prior to that, you used to invest in, I believe, index funds. So, two pretty different products there. That might have been while you were an undergrad. When was your first foray into investing, though? How old were you? And what inspired you to get started, just starting from the beginning?
Sure. I was in high school. I was 18 years old, and I read the book called The Wealthy Barber, and it explained how someone making an average salary with the power of compound interest could become wealthy over a lifetime. That was pretty interesting to me. And I'd always been kind of like a hard worker. In high school, I worked on a house painting team, so I was painting houses, and then I was a dock boy and a boat captain throughout early years of college. So I was always interested in making money and figuring out how to make more money. And index funds seemed to be the best vehicle at the time to me because I understood the power of compound interest, and I didn't think I could ever really beat the market. Bitcoin was I was introduced to Bitcoin by a guy who I met bartending on a boat. So I was the tour guide on a 60-foot double-decker tour boat in Newport Harbor. He was the bartender, and he has a crazy story. But he was a martial arts instructor in the Vietnam War. He then started an international trade business, shipping goods between Dubai and the United States, authorizing the transport and releasing payment. And then he finally was a Providence cop, a North Providence cop, who ended up taking down the Pablo Escobar cocaine drug ring in Fall River, Mass. So he was a total gangster. He's the man, and then he was a big Bitcoiner. And so I talked with him over a lot of time on the boat because he's always talking about his antique car collections, this, that, and the next thing. And I was like, "Oh, do you invest in the stock market?" At the time, I'm pouring all my money into the S&P 500. And he's like, no, like Bitcoin only. And that was how I got into it. And I bought my first Bitcoin on Valentine's Day of 2021, on Valentine's Day of 2022, where I drove edible arrangement flowers to different people's houses in my beat up car. And that was my first, and I direct deposited into Bitcoin. And then I ended up transferring all those index funds over into Bitcoin during the FTX collapse.
Wow. Okay, so you transitioned from traditional, index investing to Bitcoin, which is totally different beast. Can you talk us through what that transition was like? Given the volatility of Bitcoin, were you ever tempted to sell during big price swings, either to lock in gains or cut losses? How did you manage the emotions that come with that kind of volatility, and how did you develop the conviction to hold on to it in your early Bitcoin days?
I think it's very similar, actually, index investing in Bitcoin, and it's not recognized enough because you're both in both scenarios, you're trying to limit counterparty risk, right? The idea of index investing is that there's no non-counterparty index for global productivity increase. So I'm not saying that correctly, but the idea of like a SPY index is you're trying to track the US markets and you're betting on the continuation of essentially, well, what we now know as kind of money printing, but to an index investor, you're betting on, US companies, innovation, and, exponential growth of technology and consumerism, stuff like that. So that is very similar to what I understand Bitcoin to be, which is obviously it's energy backed money, but I think of it, the way I think about it is it's kind of a global index for productivity. So as the world becomes more productive and there's more deflation as a result of technology, it should be captured in the form of Bitcoin, which is kind of a vacuum for extra fiat dollars. At the beginning, I guess I just read a lot about it, right? If you become an index investor, you read a lot about it and you understand the power of compound interest. I think the power of compound is, if you want to be a good investor, that's the only thing that matters. It's having a long time horizon and understanding the power of compound interest. And you can really do anything. And so I think with index funds, I understood that. I was like, okay, 20-year hold. I wanted to be rich when I was old. 30-year hold, 40-year hold, whatever. Same with Bitcoin. I went to Bitcoin with the mindset, oh, okay, 20-year hold, 30-year hold. Like that was very familiar to me. And for that same reason, like holding Bitcoin through drawdowns was no problem, at least for me. And I didn't really mess around with all the shit coins and stuff too much. Like I got trapped a couple times, but I mean, ultimately, I was big into like understanding the investment that you are putting your money in. And the only way to really hold something, I think, is to understand it. And that's something Chris Milos on Twitter says a lot. You got to understand the investment. So you either have to understand compound interest and the nature of diversification if you're an index investor, or you have to understand sort of the zero counterparty risk that is Bitcoin. If you can do those two things, I mean, you'll be successful.
You ultimately made the leap, though, to what is now known as strategy, formerly MicroStrategy or MSTR. And so strategy, though, comes with, traditional stock risk, management risk. And so how did you make that leap into strategy from something like Bitcoin, which at the time, like you mentioned, you were thinking you could just hold for 10, 20, 30 years. Volatility wouldn't necessarily scare you. But how did you make that leap from just straight Bitcoin investing into investing into strategy, which comes with some other risks that aren't necessarily wouldn't necessarily allow you to just buy and hold?
Sure, yeah, and I'm by no means an MSTR OG like a lot of the other guys in MSTR True North, but I will tell you that the reason I got interested in it was because of the ETF launch. So the ETF launch makes you kind of rethink how you hold your Bitcoin. So I had some money I wanted to deploy into Bitcoin, and I was going to use the ETFs because it was locked up in traditional financial rails. And it made me question the ETFs themselves. Like, okay, is this safe? How is the custody distributed? Like, FBTC uses Fidelity's own proprietary custody system, in-house cold storage is what they say. And then I think it's one other ETF uses their own storage, and then the rest of them use Coinbase. And so I was trying to figure out, okay, I'd like to not have to put all of this in cold storage because I had like a single sig cold storage and was kind of on the fritz, like nervous about that. I was keeping it in my dorm room in college, and I had the keys stored elsewhere. But it's like that stuff was kind of freaking me out, so I wanted to go into an ETF, and that encouraged me to look into strategy and see why would I purchase an ETF where I'm taking on counterparty risk as opposed to something like strategy that's accreting BTC per share? And so I read all their 10K reports, kind of started studying. I didn't really have a great sense of the equity markets. I understood the equity markets, but I didn't understand real, corporate balance sheets until I just like read their 10Qs, their 10Ks, and started studying other companies. And I decided that if you're bullish on Bitcoin, at the time, MicroStrategy's premium was quite low. It was about 1.4, 1.3. And I decided that if you're going to take on counterparty risk, which I was intent on doing, then you might as well take on the counterparty risk with more upside than is offered in a traditional ETF. And at the time, it was a great decision.
Yeah, and so at that point, did you make it your sort of primary way of getting exposure to Bitcoin, or did you kind of like how did you think about allocation between Bitcoin and MicroStrategy to get more of that upside?
Yeah, I was a 50-50 kind of guy. And I was pretty bullish on MicroStrategy. I continue to be. So I had no problem going like 50-50. And it's all time horizon and kind of investing lifespan. Like if you're a 23-year-old kid, you can take bigger risks. And, understanding duration is different. And so I was trying to take a calculated risk here, and MicroStrategy was that for me. Obviously, I didn't put all my chips in one basket, but I mean, if I were 40, I would not be as comfortable allocating as heavily to MSTR. But I think if you do have a high risk tolerance and want to make a bet and bet on, I was essentially betting on my own analysis. I was holding a lot of long calls at the time, so that was the risk I decided to take.
Okay. Now that makes sense. And have you essentially like maintained that allocation 50/50, or has that evolved over time? And how have you thought about that given your long term investing horizon that you have?
Yeah, it's grown. The MSTR has outperformed the Bitcoin, so it's grown. And a lot of people rebalance. I'm not big into the idea. Like I personally believe the idea of rebalancing isn't. I don't like the idea of rebalancing in a portfolio, at least that frequently, and the way I invest. Like if you're taking big directional bets based on certain factors that you believe to be, whether that you call them catalysts or events on the horizon that may catapult the price of an equity forward, I think you should be buying based on your best kind of rational decision-making behavior. And rebalancing just for the sake of rebalancing, for a lot of people who are diversified and trying to protect their wealth, that's a very good strategy. For someone who's making a very big directional bet, I don't think cutting your winners is a winning strategy for someone who's pouring their kind of focus and energy and attention into placing specific bets. So for me, I'm not big on rebalancing until you're trying to do something else. If you're trying to preserve like if you decided MSTR was overvalued relative to their Bitcoin holdings, if you come upon that conclusion, then that would give you reason or cause to rebalance. But in my opinion, rebalancing when all else being equal and the company's only stronger, and I've created that capital by betting on betting on MicroStrategy, I don't believe in that rebalance. I'm going to get hate for that, but that's just my thinking.
Yeah, no, I mean, you have to come to your own conclusions, right? And do your own analysis and know, to your point, what your situation is, right? And, set up your portfolio accordingly. Do you have any other investments? Because I'm curious, when you think about like any risk that might be associated with Bitcoin or your MSTR exposure, what do you see as the biggest risk and how do you mitigate that?
Yeah, I think duration risk is really, really, and this is something RY Quant, one of the MSTR OGs, talks about a lot. Duration risk in investing is super, super important. And obviously in Bitcoin, counterparty risk is something that's talked about a lot. But if you're hold call options or you have a short time horizon on a very volatile asset, then duration is the single kind of biggest risk, especially with Bitcoin. If you believe that it's here to stay and no $2 trillion asset class has ever ceased to exist or gone to zero, then you don't want to be forced to sell during a downswing. So that's really important. Or if you're holding leverage, you don't want to be essentially liquidated because you got the timing wrong. So those are the two biggest risks. In terms of other investments, I mean, I just don't like investing in things I don't understand. I hate that idea. I think a lot of people are intellectually dishonest with how much they understand about companies. I don't believe you can just read a couple 10K reports and then think you have an edge investing in X, Y, or Z publicly traded companies. I've narrowed my focus down to solely Bitcoin, and it's the only thing I feel comfortable actually picking an investment in. Other than that, maybe I probably own gold. Like if it wasn't for Bitcoin MSTR, I mean, I'd be like focusing all my energy into real estate, trying to figure that market out, or I'd have just money sitting in gold. But I think if you're going to try to find an edge, I mean, you gotta really lock in and study that one thing because it's competitive. Like life's competitive. You can do it. You can find an edge, but you're not going to find an edge in 6 different markets, in my opinion, or that's very difficult.
Yeah, I'm curious if you think about making adjustments as certain market shocks hit, right? So kind of on a similar note, stocks, assets, they're always vulnerable to various market shocks. It could be macro headlines around tariffs, the carry trade, black swan event. So when something like that happens, what adjustments, if any, do you make to your investing or trading strategy to protect your capital?
Yeah, I mean, that's kind of an interesting one because it's like, what's that guy? Nassim Taleb? I forget his name exactly, but he wrote that book, Randomness, something out of randomness. I forget the book, but I read that and that was pretty influential. And this idea that like financial media, news, headlines, all of this sentiment, largely there's just emotions at play in investing, and fear takes over, and sort of, unwinding of long positions can unwind markets. I think you have to have a long-term like macro or positioning view and have that define what assets you own. And you can't be like wishy-washy about how like the world affects those positions. Like I'm a huge believer that you should make investments without looking at the price of something. Like that's not really true. Like it has when you make the investment, you have to look at the average price over the last 6 months and decide, okay, like this is a good entry point for the next 5, 10 years, whatever, or even for the next 12 to 18 months. But I don't think you should be looking at the price over a short time period and reacting. Like that's where you get into really bad trading, is like if you look at the price and the price does something and then you react to the price in a you're not buying fear or something, but you're just reacting. I think that's for me at least, I've made my worst decisions doing that. So I try to keep the price like, I built a software tool for myself where it just gives me like a daily price trend line, and it doesn't give me any sort of intraday movements. That helped me a lot too. So I don't look at like intraday prices. I try not to. I just look at daily or monthly prices. Much easier if you're not trading. Like I'm not trading anything less than kind of a 3-month time horizon, and like everyone knows I'm not going to beat Jane Street with just my laptop. So.
Right. No, it's like you have to have the right tools, right, if you want to get into this trading thing. But it's interesting because Warren Buffett talks quite a bit about not letting the price of what the price that an asset is selling at on any given day, or with stocks at any given moment, like tell you what to do, right? Like he always says, even before he looks at the price of something, he tries to value it, to your point, right? And then come up with his own price. And then if the thing is mispriced, he'll buy it, right? And so it's kind of like using the market to your advantage. But again, I think you need to have that long-term time horizon. He also talks about, if you're going to go buy an asset, you should be okay with the stock market closing down for the next 5 years, and that's a real investment. So I was wondering, did any of these thoughts, these ideas that you have, come from someone like Buffett, or one of these like more traditional value investors, or are these just sort of concepts you've developed sort of on your own as you've dove into investing?
Yeah, I've never read Warren Buffett stuff. I've heard all those clips from Buffett, and definitely, I guess, everything you hear and listen to, it's all just programming for your brain. So, it's obviously seeped in. Uh, I like Druckenmiller. I think he's pretty interesting with how he's like navigated markets over time. I guess I align with like the Bitcoin maxis the most. Like this idea, like I really do think like in a technology driven world, everyone should be able to accrue value as goods and services become cheaper as a result of deflation and increased productivity. And so like that just drives everything for me. Like I really do believe that you can have hope for a society like that. I always thought that would be kind of expressed in index investing and in compound interest, just the power of compound interest. But I think Bitcoin is that. It just represents it in a different way. And I said that before. That underpins everything I kind of believe at this stage in time.
Do you think there are any other crypto assets besides Bitcoin that are promising at this time? And if so, which ones?
I think if you invest in other crypto assets, you're investing in a tech security. And I don't know enough about the future landscape of whether that be decentralized finance or tokenization of securities to necessarily know who the winner will be. So I completely stay out of all of that. I have no idea who the winner will be. And if you're buying other crypto assets, you're buying tech securities. If they have a founding team, like you just got to know your stuff. And, maybe Pantera Capital is really good at doing that. Or maybe, Kraken's venture investing arm is really good at that. I have absolutely no clue. I kind of think the bigger banks have a lot of stake and a lot of vested interest in leading the tokenization of assets and building out a suite of kind of Bitcoin native products or crypto internet native securitization products. So I'd be hard pressed to say over a 10-year time horizon that X, Y, and Z little project will outcompete BlackRock. That's not to say BlackRock may not acquire that project and you may get an incredible return on capital, but that's VC investing. I really do think all that's very, very much so VC investing.
Gotcha. Okay, so that's sticking with Bitcoin, but no, I appreciate the focus, right, and like really narrowing down, really going deep on something, especially if you're trying to make it a long-term investment. So, sounds like you're really focused there on what you're doing with Bitcoin and by extension MSTR.
And I mean, yeah, and to that point, I mean, Bitcoin's a 30 kegger asset with no counterparty risk. To an investor, that's the holy grail. Like if you believe that to be true, which I believe that to be true right now, Bitcoin's a 30 kegger asset with no counterparty risk. I mean, on a risk-adjusted basis over a long period of time, like there is no better investment. So that's just something to think about.
Right on. Did want to transition to our first principles section. It's something that we think is unique to this show, and we enjoy doing here. So we're calling this segment First Principles. Essentially, I'll ask you a few questions about specific ideas, and I'd like you to break them down from the ground up. Want you to explain the reasoning or prove your thoughts, essentially step by step. And I'll start you off with a softball here. So I hear, as you were talking about earlier, you dislike meme coins. Maybe you got sucked into a couple of them here and there, but because of that, I think your kind of reasoning there is because they have a negative expected value. And so, from first principles, could you explain to our viewers what this means and why, generally speaking, meme coins are a bad bet?
Yeah, the idea of expected value, in my opinion, is super important just in life. I thought before, when I was early in Bitcoin, but before I got into this MSTR stuff, I thought I was going to be a professional poker player. So expected value is like really important in terms of probabilities. And in college, I studied electrical engineering, and a lot of that's math and statistics. And that expected value just means expected value is it's the expected return over a repeated number of trials of a certain like probability distribution. So I'm not saying that it's not a textbook mathematical definition, but the idea is if you were to, let's say you have a coin and you flip it 100 times, and if it lands on tails, you get $1. If it lands on tails, you get $1 taken away from you. If it lands on heads, you earn $1. Over 100 trials, you're expected to be net neutral. You're expected to have $0 at the end of it, and as the number of trials extends, more and more and more, you converge towards that kind of expected value in theory, and that can be brought into any sort of like probabilistic game where you have repeated trials. So in terms of poker, positive expected value means that over the long run, if you continue making a decision or making a bet at a certain point in the game, then over enough trials, you're likely to come out positive in the long run. So similarly with whether that be meme coins or investing, the idea is like edge. So edge just means over a long period of time, over many trials, you have a positive expected value, or you're expected to have a positive win rate based on the number of losses and the amount per loss on a certain number of trials, and the expected number of wins times the expected amount won per win. So that's the formula for expected value. Now, meme coins, I mean, I couldn't tell you, I'm not sure, but maybe you have an edge and you have a positive expected value. But I've always believed with meme coins that, let's say, much like the lottery, right? If 1 out of every 10,000 meme coins earns you $1 million, whereas the other 9,999 meme coins that you invest your money into lose your initial $10,000 principal, then over the long run, you will be negative in terms of the expected outcome of betting on each one of those meme coins. And those numbers aren't that accurate. But the idea here is that if in a game where you lose more frequently with a certain amount of money, and you add that expected loss over a given set of trials, to the expected win on that one large payoff trial. And when you add all that up, you're negative, your expectation is negative, then you wouldn't play that game. You shouldn't play that game. And so I don't play that game.
Yeah, no, that makes sense. Getting a little, we'll climb up here, making it, stepping up a little bit. So for the second first principles question, wanted to ask about options. I know that's sort of, and we'll talk more about options as well. I know you're really knowledgeable about that space and big into options. So options traditionally, though, typically can be a very much a zero-sum game. In fact, most call options expire worthless. I'm curious, though, why do you think MSTR options are different? And why does it make sense to invest in MSTR call options as opposed to just holding the underlying stock, which has performed exceptionally well?
Yeah, I mean, that there's a lot of different kind of there's a different numbers on that statistic with 95% of call options expire worthless. I've heard that part of that metric is because most call options aren't in fact exercised, nor are they held to expiration. Most market participants that have a successful trade will sell them back to the market maker. But I'm not exactly sure how that plays out. So in terms of MicroStrategy Bitcoin call options, well, it's an idea that I got from Josh Mandel. And the idea is that you can't really effectively price a long-term Bitcoin option. And you can't really price a long-term option, period. No one knows how the world's going to be in 3 years. You can use a Black-Scholes equation, which reduces a option price to volatility, expected drift, and interest rates. But that can't take into account all of the unknown factors of the future. And so for shorter duration options, those are pretty accurate based on the volatility. But for longer dated options, you're making a bet that no one, not even a computer, can price accurately. So there are factors out of the pricing mechanism's control, the algorithmic pricing mechanism's control, that you may foresee, right? Whether that be NASDAQ inclusion or S&P inclusion for MSTR, or whether it be a expected Bitcoin CAGR. These options can, there's differences in opinion based on those pricing. And the beautiful thing about Bitcoin's volatility is these options allow, because there's it's such a volatile underlying asset, there's all sorts of participants looking to make that market. And that market can be, and those premiums are very, very rich as a result of the volatility. But for example, I think the interesting thing I think about is like, okay, so let's say you have a Bitcoin or an IBIT option expiring in 3 years, right? What's the price of Bitcoin based on your model in 3 years? I mean, I have said I think it's going to be above 30 CAGR for the next 3 years. And if you believe that, I mean, your expected Bitcoin price would be around, between $250,000 and $300,000 based on like the current price. And if you expect that to be the case, then it's like $250,000. But if you expect that to be the case, so you expect it to more than double over that period of time, the proper options price for such a scenario would be such that the option itself costs more than the underlying, because you're expecting a more than double over that period of time. To you, like the fair value of that option may be to you. And obviously that doesn't account for risk, X, Y, and Z. But you can't price, an option can't be worth more than the underlying. Right? That's just fundamentally flawed, because anyone would buy the non-duration risk asset, which would be the underlying. So I think it's hard to price Bitcoin options because Bitcoin's this weird thing that has an incredibly fast CAGR and no counterparty risk, and has increased volatility with increased price. So the typical options pricing models aren't sufficient to price it. So that's kind of where I started out. And with MicroStrategy, it's very similar. Because it behaves like a Bitcoin derivative. And yeah, I mean, I just don't think you can price. I think it's up to, you can't price a Bitcoin option, a long duration Bitcoin option with the Black-Scholes equation. That's what it comes down to.
Yeah, no, that's super interesting. Because MicroStrategy is even like a step up above the sort of volatility that you get on Bitcoin. So Bitcoin, if options on Bitcoin would be hard to price, long-term, long-dated options on Bitcoin, if those would be hard to price, then you would expect MicroStrategy long-dated options to be even harder to price today. But here's another interesting one for you, and there's a lot of debate, conversation around this. So I'll let you break it down from first principles. Why does MSTR trade at a premium relative to its net asset value?
Oh, that's an interesting one. Yeah. I mean, I think the first question, and this is something Jeff kind of pioneered back in the day, was, okay, why do equities trade at a premium to their asset value in the stock market? You know, a lot of companies are valued at a very, very high multiple relative to their assets. And then it's like, okay, why are equities valued the way they are? They trade at a multiple to their future cash flows, discounted future cash flows. But all these multiples are different, right? Like there's this idea you're taught that equities just should trade at a certain PDE ratio, or they should trade at a certain multiple to their book value. I mean, every company trades completely differently. So there's no set formula to value one of these things. And you're trying to figure out what it's going to be worth in X number of years, and there's no set time frame. Like if equities are forward looking, like how do you set the duration you're going to look forward, right? And the beautiful thing, and so, you know, half of all publicly traded companies will be out of business in, I think, 10 years. That's the Saylor statistic that he uses, or half of publicly traded companies in the S&P. So with Bitcoin, it kind of makes a company immortal, in my opinion. And with something like that, how forward-looking should the multiple on MSTR's BTC accumulation be? And then how forward-looking should that's another thing I want to talk about, but how forward-looking should the value generated by their BTC holdings be? So I guess the 2 points is like, what's the fair price to book value of an equity? That itself is based on the productivity of those assets. That's really, really key, right? The productivity and profitability of those assets. Then what is the justifiable price to earnings multiple on for traditional equity? And both those things are forward-looking. And I think the price to earnings multiple is an attempt to quantify the productivity of the company's underlying assets. And then this is all amplified by growth projections. So for a company like MicroStrategy, the questions you have to ask are, their underlying assets are their Bitcoin, it's kind of their nuclear core. What is the future growth of that Bitcoin stack looking forward into the future? That in itself is kind of a self-fulfilling prophecy, because if the company's immortal, there will always be a forward-looking multiple on their BTC acquisition. So there begs a premium, right? There begs a premium because if the company can, in theory, be sustained by their Bitcoin holdings, and they continue executing their strategy as they have been, they will always keep accreting BTC per share. Okay, so that's one part of it. Two is the leverage ratio itself. So their leverage ratio right now is they have about 20% debt relative to their Bitcoin stack. When I entered into MicroStrategy, their debt was about 30% of their Bitcoin stack. And that multiple itself, if you believe Bitcoin's going up over a long period of time, begs a multiple as well, right? If you have a leveraged Bitcoin hodl, and over time that leverage will melt away, then there's a premium. You should place a premium on those Bitcoin holdings, right? Because if there isn't a premium, then that leverage will just be accrued to the company itself, which will make it, in theory, like more profitable than just the BTC price increase. So like if MicroStrategy holds, so let's, for example, say MicroStrategy is trading at a 1 multiple to their assets, to their Bitcoin holdings, not to their net assets, but to their Bitcoin holdings. And they have debt in the form of Bitcoin leverage. Over time, as the price of Bitcoin increases, the price of their debt will decrease. And so a 1 MNAV at the beginning will then result over time with no BTC per share increase as a negative MNAV, right? Because their Bitcoin holdings increase, or their value of their Bitcoin holdings increased because the debt dissolved. So in theory, you should have a premium that's forward-looking on the debt and Bitcoin structure itself. So that's the second thing. Now, the third thing is this idea of how productive are the Bitcoins. And I would argue the Bitcoins within MicroStrategy's capital structure are extremely productive, right? They've allowed them to create fixed income products such as Strike and Strife because they're backed and collateralized by the Bitcoin. And we'll see over the next year how much income in the form of BTC per share these fixed income products bring in to MicroStrategy itself. And that's not even to mention this idea of getting yield on their Bitcoin in the form of lending or having it somehow back different different, capital markets or insurance-based activities. So I think there's just a lot of reasons that the Bitcoin itself within MicroStrategy's capital structure is much, much more valuable than just simply unproductive Bitcoin sitting in a cold storage wallet or in an ETF for that matter. So those are all the reasons I would argue for a multiple on their holdings. And then the most kind of fundamental and basic idea for a multiple is there's two more things that I don't think are reasons, but are sort of philosophical ideas. So one is, what would be the cost of another corporation to go out and acquire 50 billion of Bitcoin? Would that put the price of Bitcoin double where it is now or triple where it is now? If that's the case, that would be the fair value of MicroStrategy's corporation relative to their Bitcoin holdings. So you could argue that, or you could argue that the multiple is not a function of what the market necessarily thinks MicroStrategy should trade at. The multiple is a function of passive flows, which are about 40% of the total stock market as a result of QQQ inclusion and what potentially could be S&P 500 inclusion, and people and entities who can only buy MicroStrategy and not cold storage Bitcoin. So there may just be a reason for a multiple because it's a capital vehicle that investors can access who don't have access to different Bitcoin products.
Very, very interesting there. And thanks for laying out all of the different, sort of verticals or ways that, cause MicroStrategy to trade at a premium. But you did bring up fixed income products that MicroStrategy has. And to sort of wrap up the first principles section, I wanted to actually go there, particularly because there's a lot of debate on X right now about MSTY. And for those watching who don't know what that is, MSTY is an actively managed fund that seeks to generate monthly income by selling and writing call options on MicroStrategy. And so I wanted to know, since there's all of this debate about whether MSTY is actually a smart vehicle for income-focused investors, or, if investors would be better off just actually buying MSTR, holding that, and selling shares or selling call options against it for income. I wanted to tackle it rather from a first principles perspective, though, as opposed to just asking you which one you think is the wiser option for generating income. And so with Strategy itself, they actually now offer several investment products that's available to retail. There's MicroStrategy, right? That's just investing in their traditional equity. But they also have these two fixed income products, STRF and STRK. And so just breaking it down from first principles, what kind of investor do you think should invest in MSTR versus MSTY versus STRF versus STRK?
Yeah, I think the best way to think about these different products is not in at the currently advertised distribution rate for each of those products, but more in a theoretical sense of what you own, what kind of claim you have over the assets based on these different equities or structured products. So a quote that Josh Mandel offered that kind of changed the way I think about equities is he said, an equity is a call option on the assets of an indefinite call option on the assets of a corporation minus their debt. So if you think about an equity like that, it really makes you think, okay, what do I own when I own different MSTR products? You essentially own a portion of the Bitcoin owned by MicroStrategy and a portion of their treasury operations and their BI business. So that's what you own when you own Class A shares. So Class A shares sit at the bottom of the capital stack. So at the top of the capital stack are the convertible notes. Those, in the case of liquidation, in a liquidation event, will be paid out first to debt holders. Okay, and those will be paid out in U.S. dollars based on the principal and coupon value owed to them by the end of the duration of those convertible notes in a liquidation event. Next in the capital structure is STRF, which is the non-convertible fixed coupon indefinite preferred shares. Right now, those are yielding about 11.4% coupon on their current trading price. And what you get there is in the case of liquidation, $100 per STRF share. Again, you're junior only to the convertible note holders, and you're over collateralized by about, I forget the exact multiple, but I think it's close to like 5 or 6 based on the Bitcoin holdings. So, and those coupon payments, there are special clauses that say if any of the coupon payments are missed to a STRF holder, by MicroStrategy, STRF holders can appoint a member to the board, and strategy will have to either sell Bitcoin or do anything in their power to get the next coupon payment out, which actually accrues interest over the duration during which the coupon isn't paid. So the point being is there are levers in place such that those STRF holders are first in line to get their money in the case of both coupon payments and in a liquidation event. Strike is much like STRF with a conversion option into Class A shares. That sits junior to STRF with a lower coupon. And finally, you've got Class A shares, kind of bottom of the barrel of the capital stack. In theory, the capital activities used by, or the capital markets activities performed by a strategy with respect to their convertible notes, their STRF and STRK, should accrete BTC per share, which directly benefit the MSTR Class A shareholders who have a claim over the rest of the underlying Bitcoin. So in terms of those structured products, okay, where do you fit in as an investor? Well, if you're bullish on strategy and their capital operations and the growth of the equity and the growth of the business, you would be long Class A shares, right? You want full upside and your downside isn't limited whatsoever. If you're kind of a hybrid there, STRK would be your cup of tea. STRF, the way I think about it, is to bet on the financial health of MicroStrategy and the continuation of the Bitcoin network. But you're not betting directionally on the price of Bitcoin. The price of Bitcoin could go down for 10 years and you'd still be paid that coupon. So the bet you're making there is much different than the bet you're making with Class A MSTR shares. Then finally, the convertible notes are just like a cream of the crop product for those convertible investors. They've outperformed Bitcoin, and they're private placements. So you have to be really in the know to get those products. Okay, so how does that compare to MSTY? Well, MSTY, you don't have a claim over anything. That's really important to understand. Those funds to get around the Investment Act of 1940, I think it's like the Registered Investors Act of 1940. I forget exactly the name, but that act says a diversified ETF has to own. It's a 5-10-25 rule, 5-10-75 rule, excuse me. So no more than 5% of an ETF can be in a single security. You can't have more than 10% of the voting shares of a corporation, and these rules are applicable to 75% of the total assets of a ETF. So the way they get around that is these ETFs hold about 85% in treasury bills, which don't qualify as a need for diversification in this diversified ETF fund. So they hold these treasury bills, and then in conjunction with long calls against which they sell calls to generate income. So, okay, when you think through the structured products from MicroStrategy that I mentioned earlier, you have a claim on something. You have a claim on real Bitcoin based on clearly laid out specific terms. With MSTY, you're betting on their management team, their traders, to make good, prudent trades that generate income for you. There's no floor, and it's not backed by anything other than the treasury bills that they hold, which in theory is a very good backing mechanism. But there is return of capital and other things that go into place such that you aren't really guaranteed anything. Now, is that a great way to generate an 80% annualized dividend yield? MSTY? Yes, sure, it is. But you have 80% downside correlation with Class A MSTR shares. And so I don't think MSTY is comparable to STRF or STRK for the following reasons. STRF and STRK have a built-in floor because of their coupon payments. There's a built-in floor, and they have a liquidation preference, which is a backstop or a worst-case scenario payout based on backed, collateralized by MSTR's Bitcoin. So that's really important to understand, right? There's a floor on those. MSTY has no floor. It's pegged to MSTR Class A shares performance, has 80% downside correlation, and then it sells upside to return capital, return income to the investor. Now, with MSTR, you have a claim over the underlying Bitcoin after the other debtors have been paid out in the capital stack. With MSTY, you don't have that, okay? But with MSTR, the important thing there is that, and this is the other distinction. So again, you've got selling upside, generating incredible dividend yield, but with no claim over any real assets at a part of MicroStrategy, other than the treasury bills held by the fund, MSTY. Then you've got MSTR, which has a claim over the assets of MST of strategy. Okay, strategy is returning a non-taxed BTC yield to Class A shareholders in the form of BTC per share accretion, right, or BTC gain. That's really interesting compared to the idea of MSTY returning a cash dividend by selling the volatility to investors, which is taxed. So if you have a really long-term time horizon, you're bullish on Bitcoin, and you want to defer taxes for the next 10 years, Class A MSTR shares is the best long-term directional bet you can make on Bitcoin and MicroStrategy. MSTY is a much better pure income generation vehicle where you just think the volatility is valuable and you sell it to and you want this volatility harvested and directly put into your pocket. The other products are great for investors who need a floor, need Bitcoin collateralization, and want an a coupon payment that is backed by the structure, the continuation of the Bitcoin network and the financial strength of MicroStrategy. So those are the different offerings. I think for a sophisticated large portfolio, those STRF and STRK offerings are really, really intriguing, appealing.
Awesome. No, that's a great breakdown. And Dan, you've been providing a lot of great, I think, insights here. We do also like to just put together a specific section for alpha for our listeners, although, again, I think you've been providing a lot of good info here. So just want to pick a few questions from this section. And maybe I'll start with, in terms of just transitioning here, in terms of Bitcoin and the crypto ecosystem more broadly, it's constantly evolving. You've managed to carve out an entrepreneurial path in the space for yourself. For our listeners who want to get involved but don't know exactly where to start, how would you recommend they identify meaningful opportunities?
I mean, in my life, I've always just had more luck with doing something I'm interested in. And I was just like interested in strategy, interested in trying to turn my money into more money. So I just started doing this. And, it's definitely built my own network. So the social media is powerful. Use social media to your advantage, put yourself out there. And I think people find you. If there's something valuable you're doing, that's something I learned early on too. I used to want to to start a band and be like a rock star. And I mean, if you don't put yourself out there, you don't play for other people, you don't get your name out, then no one cares. You could be the best guitar player in the entire face of the earth, but if no one hears you play, it doesn't matter. If a tree falls in the woods, it doesn't make a sound, and there's no one there to hear it. So I think life's a lot like that. You need to make some sound, make some noise, and get yourself out there. And like providing value for other people for free is just like massive. I think it's like really, like I remember being in college applying to like all kinds of engineering jobs, this, that, and the next thing, like not hearing back, this, that, and the next thing. And then my life changed a lot when I just started like, this is what I'm interested in, this is what I'm doing. I think it could help people. I think people could do this and follow along with me, and people start talking to you, reaching out to you, this, that, and the next thing. So just like do your own thing. Do your own thing. Go for it. You don't need anyone's permission. If you're interested in drywall or plastering or tile hanging or whatever, refrigerator installation, or maybe you name it, cooking, just do it. Post it, find people that are interested in what you're doing, show your skills, offer value for free. The world, it's very, you can mold it to your own kind of your being or your will.
No, I really like that. You don't need permission, and finding things that or pursuing things that you're interested in and adding value. You've launched Achilles Intelligence, or have been working on Achilles Intelligence, which, from my understanding, is a platform aimed at helping options traders improve their decision making. How has the launch been so far? What feedback have you received, and how does the tool improve your own trading results?
Sure. Yeah. It's actually, I coded it all myself, and so like the interface isn't that user friendly. And right now it's just open source. Like anyone, it's not open source, but it's free to use. Anyone can just hop on and register. And I released it to the public because I mean, Grain of Salt was using it a lot, and I think it helped him understand how these options behave with different pricing regimes and different price changes over time. But then I was like writing cover call back tests just like for myself because I wanted to see like, okay, what are the risks you take on in different scenarios? And those covered call back tests that I wrote for myself have been invaluable. Like it kind of struck me, like I was doing this for myself and I was just like, wow, these have been really helpful. I mean, like what's the actual risk you take on by selling weekly covered calls based on the ability to roll, right? Okay, you may get called away this week, but what's the chance the stock doubles next week and you get called away again? And so like you can quantify that based on like historical data, or I have attempted to at least with these covered call and cash secured put back tests, create your own income generating portfolio. I found that to be so helpful for me. So I wanted to, allow other people to use it. And I think some people are using it. I think a lot of people like the call option optimizers because it's more interesting to like look at your, 1,000% returns, your hypothetical 1,000% returns than it is to look at how you may get like, 0.4% income this week based on this covered call. But they're all tools at your disposal that like, I've kind of, I'm trying to offer to people and hopefully, we can build it out a little bit. I'm working with this AI engineer now, and I think we're going to completely overhaul it. Have a bunch of machine learning, different programs in there, and it could be pretty good. It could be pretty helpful for people looking to trade options.
Awesome. So that's Achilles Intelligence. Sounds like there are some really good features already, and you guys are looking to add and expand to that. So awesome stuff there. And shifting gears just a little bit, I wanted to know if you could share a mistake or lesson from your early investing days. Obviously, you're still, super young guy, but you've been investing for some time now. If there's a mistake or lesson you can share from your early investing days, something that may have felt like a failure at the time, but ended up actually really shaping your philosophy in terms of finance investing in a meaningful way.
I think I'm learning as I go. I mean, like I lost a lot of money in like November, December, and those experiences kind of like weigh on you. I mean, like there were a lot of things I did. I remember in that run up, I made some really good trades, some good long trades. Then I levered up a little bit too heavy, but I always kept my options durations long, and I didn't get carried away with euphoria in the way I could have. So like there's just a lot of emotional lessons you learn. Like I've sold calls, bought them back for a lost, like tens of thousands of dollars in a second. Like that kind of stuff like stays with you. And so I think, and they say like, you have to learn through experience, and they're expensive lessons. And I mean, I'm definitely learning them as I go. But if you want to, yeah. So it's like mitigating risk, like knowing yourself, all that stuff. Because like there's not much to mess up with holding spot Bitcoin. If you're just holding spot Bitcoin, just like do good custody and like do something else. The other thing I've learned in terms of investing is like noise is very, it works against you. More media, more financial media, information, this, that, the next thing, it tends to work against you. The best ideas I've gotten have been from reading 10K reports, thinking, and understanding the Bitcoin protocol. Everything else is noise. Everything else is noise. Most of like this macro stuff is like noise. Like the only thing that like really has informed my view is like global liquidity, but you can read and listen to CNBC and all this stuff every day of the week and go crazy and lose your mind and make bad decisions. But I mean, like it's just reading. It's just reading and tuning out the noise. Like sometimes doing less is more. And that's what they say, the big money's in the waiting. So that's always kind of what I try to fall back on.
Awesome, great stuff. All right, let's move it on to rapid fire as we close things out here. So, got a couple questions for the rapid fire section. I'll start off with if Bitcoin, continues to, or actually Bitcoin, it continues, to infiltrate various layers of our traditional systems. I think in surprising ways. Obviously, we have the BTC treasury companies, which we've talked about. That's becoming more and more popular. There's now Bitcoin-denominated life insurance. And the U.S. government has a Bitcoin strategic reserve, right? Who would have thought that a couple of years ago? But considering all this and other sort of ways Bitcoin is infiltrating our traditional systems, what BTC innovation or development over the past years do you think is most interesting, and why?
I mean, lending. Our entire capital market system is based on debt. and lending. And if you can buy 100 grand worth of Bitcoin and Bitcoin state, like let's say in 20 years, Bitcoin, oh, this is over the last year. Okay. So last year, lending and insurance, single two most important areas. You can now get Bitcoin backed insurance through Anchor Watch. I guess I'm just free plugging them right now, but Bitcoin backed insurance from Anchor Watch. And there's better and better lending solutions coming online. Huge parts of the Bitcoin as the foundation of money, in my opinion.
Okay. So Bitcoin lending. And moving gears here, sticking with rapid fire, your YouTube channel has become a real resource for people who are trying to understand options, BTC investing. Curious what your content strategy is and how you decide what to make videos about.
Yeah, I just think of stuff that I'm thinking about, like whatever I'm thinking about, whatever I'm trying to figure out. I allow the videos to guide my research. So I'm like, I need to learn this. So I learn it and I make a video about it. It's like anything, you teach it, it's better, or you learn it better by teaching. That's what I do with the videos. And, I'll post like other stuff, boat videos, just like lifestyle videos. My plans for the future is I don't want to just be like a Bitcoin guy by any means. I think there's going to be a lot of lifestyle stuff coming up here. So, that stuff's exciting to me.
Good stuff. Would you ever loan out your own Bitcoin for income?
Yeah, through Fidelity, but no one else.
Okay. Why Fidelity? Maybe if you could, expand on that a bit.
Too big to fail. I mean, you can go to a too big to fail institution, but you have to be at an institution where if it went down, it would mean the end of the financial world as we know it, and pretty much another recession, depression, dark ages. I'm fine with lending my Bitcoin out through an institution where if it failed to prevent me based on the terms of the lending, if they failed to make me whole, then the only case in which that would happen would be a dark ages where the only thing that would matter is having guns. So that, I'm okay with that. Yeah, as of now.
What would the yield have to be for you?
I mean, through Fidelity, 5% would be fine.
Gotcha.
But through anyone else, even with anyone else, the yield isn't the thing; it's the trust, right? The yield doesn't matter. You could be some sketchy place and offer me 100% yield, and I wouldn't take it, even if you were a medium sketchy place. I wouldn't, or you didn't understand. Yeah, the code has to be verified. Okay, open source verifiable code. Maybe you could do some sort of smart Bitcoin mini script lending that is open source and verifiable code, and somehow it's also backed by insurance. Maybe I'd be comfortable doing that. But then it's just a risk reward thing. It's your 5% BTC yield, or your, in that case, maybe 3% BTC yield. Wouldn't really matter if you're compounding at 40% annually. So yeah, it's stuff people are gonna have to think about.
Interesting. Well, Dan, you're part of MSTR True North, but I'm curious, what is Dan Hillery's True North?
True North, I mean, freedom money. That's the whole point. It's to get free. A lot of people, for me, it's something I focus on too. You can get so sucked into Bitcoin, be Bitcoin's this, Bitcoin's that, Bitcoin's my personality, Bitcoin's my identity. I don't think it needs to be. I mean, Bitcoin's cool, whatever, but the whole point is freedom money and then design your life. This is Bitcoin is your XP if it were a video game. It is your life force. It's your energy. Take that and do it. A lot of people are oh, I want to quit my job and live off my stack. That's great. That's awesome. And then other people are no, keep stacking. This, the next thing. All the Bitcoin does is it gives you energy and fuel to do what you want in life, to exert your force on the walls of reality. So I think people miss that. You don't have to make your life Bitcoin. Bitcoin can kind of gives you the resources to make your life in the world, to make your, yeah.
So yeah, using it as a means to the larger end of true freedom. Of that. Okay, closing thoughts here. So as we wrap up, just wanted to know, what are you currently reading, listening to, or learning about that's inspiring or influencing you right now?
Reading this, Candace Millard. She's the single best, in my opinion, historical. Well, these are historical. It's historical nonfiction, but she's a great storyteller. She wrote a couple books on Winston Churchill's early life. This is on President Garfield, James Garfield, rise from poverty to the presidency. And I mean, they're just great. Like, I love reading history, super entertaining. I think we learn by stories, and we've really forgotten that. Like all through history, humans have learned by reading and understanding and telling stories. I think in the modern world that has completely gone out the window. And I studied engineering, and like all the learning was like, I don't know. I'm definitely, having spent so much time studying math, engineering, probabilities, that, that, and the next thing. I do think like storytelling, history is just so important for communication and engagement with other people. So it's something I've been neglecting and trying to catch back up on.
I love that. And so then, where can people follow your journey and keep up with your work?
Yeah, sure. My YouTube's, I don't know what it is. I think it's Dan_NGU. That's a really dumb name, but I should change that. My Twitter is Hillery_Dan. You can find me there. And, MSTR True North, we do our Wednesday podcasts at 10 p.m. Eastern time, and our like meetups, whatever they're called. And, we have events going on. We have a Bitwise event in New York City on the 24th. We're going to have a public event on the 23rd for anyone who wants to come and meet us. And then similarly, we have a MSTR True North Day in Orlando prior to the Strategy Bitcoin for Corporations conference, and I imagine we'll be all at the in Vegas for the Bitcoin conference. So yeah, lots of places to come and pick our brains.
All right. No, great stuff, Dan. Keep killing it. More power to you and more freedom to you as well. So, thanks again for the great conversation. Really appreciate you joining us today.
Yeah, I appreciate it.
All
I really
right.
I thought your questions were on point. I mean, this was an awesome podcast, best one I've been on. So thanks again.
Oh, too kind, too kind. That was really fun, though. Really enjoyed that. But yeah, hope to catch up with you at one of these events.
Awesome, we'll do.